So why and machine learning in finance? All of you might be aware of ChatGPT, autonomous cars, and all that. What they are really good at, they are really good at capturing things at a very, very fast speed. So autonomous vehicle, it covers or captures the content almost 1,000 times compared to the human eye. And they process and act on the information in half the time compared to the humans, right? So if you think about trading, that's what you need to do if you're doing HFT and high frequency trading and all those fancy stuff, right? And it has this potential to automate and disrupt the transportation sector when we talk about autonomous vehicle. And the same thing applies to finance. In finance, in most of the use cases, you have to process and act on quite a lot of data, and that's where the value add comes into picture. And additionally, it has this potential to automate and disrupt the finance sector as well. That's what we will see. Going a little deeper, there are a couple of advantages. So if you think about the reason for the exponential growth, I break it down into two parts. The first part is the AI/ML advantage, and then there are a couple of recent innovations, right? So what are the key advantages that we talked about in the previous slide? It processes high volume, multi-dimensional, multi-variety data very quickly. So all these three terms are very important when you think about, let's say, being a trader. What you have to do, you have to look at volumes of data. They're multi-dimensional. You will have sentiments and the balance sheets and whatnot, and they're multi-variety. They're not just numbers, but they're also pictures and some text these days, right? And the second point we talked about in the previous slide, potential to increase automation and decrease cost. What has been happening recently? There's a significant growth of data. So why did machine learning and AI is growing so fast and it's possible as of now? Because the data is growing significantly. Every year, the amount of data that we produce is equal to what we have produced before in the entire humanity or entire history, right? So there's a significant growth of the data. Then we have a very fast computer. That's why the Nvidia stock price is going like crazy. But what used to take like hours, it's taking seconds these days. And then we have complex AI/ML algorithms which can be implemented easily. So 20 years back, something for which you had to write 5,000 lines of code that can be done in just one line of code these days. Right? So this is why there's a significant growth, and finance, of course, is not behind. So this is an example of all the banks. This like gives a bigger picture. All the banks and their valuation. So and financial, which adopted AI, it in a very small span of time, its market value is much higher compared to the Goldman's, Morgan, BlackRock, Barclays of the world. And one of the reasons being, it's adopting AI at a massive scale. So that gives you the power of AI and machine learning. And just a good point. This was not just for bank. This is also for you guys, for the professionals, for the practitioners. If you're not adopting, if you're not reinventing, there might be a situation where you might become irrelevant as what happened to Nokia. Not scaring you, but yeah, this is more to motivate you guys. What does job scenario looks like? And that's something as someone who's, let's say, going for master's program, we are concerned about. That's one of the most important things. So there are two schools of thought. People say that, yeah, job will be gone. You'll see a lot of articles on a daily basis that 2020s, for example, could be a apocalyptic decade. But at the same time, we also see that the jobs in AI and machine learning, they're growing like crazy, right? So there are reports about jobs requiring AI skills increase significantly. Finance teams, people who work well with robots, right? So it's not that the jobs will be growing. That's my perspective. The new jobs will definitely be coming. It's just that you have to reinvent yourself. There'll be kind of displacement of jobs. Now, even if you look at the con jobs, there are multiple or all these big banks, all these financial institutions, they are hiring for AI experts and quant who are good in machine learning kind of grows like significantly. Right? So there are a couple of news articles on the left-hand side. Even if you look at the right-hand side, this is something I got from one of the news articles. Yes, there are programming skills, quantitative skills, deep knowledge of financial markets. That's what you get in MFE programs like MFE, the first three. But even the fourth one, knowledge of machine learning and AI, that's been growing significantly. So there are a bunch of jobs in machine learning engineers, AI researcher, algorithmic trading strategist, not just on the sell side, meaning all the banks, but also on the buy side. So yes, there are jobs coming up. Now, I'll just give you a quick overview. I think this is something everybody might be aware of. People have all these, there are all these terms which are floated across, like AI, machine learning, deep learning. But I mean, all of these can be used interchangeably. And I mean, if you look at this picture, deep learning is a subset of ML. ML is a subset of artificial intelligence and data science. Kind of overlaps with all three of them. There's a minor difference between what AI and machine learning and deep learning is. So start from, let's say, deep learning. The rule of thumb here is if you are looking into artificial neural network with more than 3 layers, they're called they're categorized as deep learning. Then machine learning is where you find complex pattern in the data without being directed specifically. This is the most useful thing when it comes to quantitative finance. And AI is like a superset of machine learning, where you also have things like NLPs and chat GPT and whatnot. And that's also used in finance. But my take is that ML is something which is used quite significantly in quantitative finance. Now, this slide is overwhelming, but it will give you a bigger picture of how it is being used in different use cases. What are the different types of machine learning? So we have supervised, unsupervised, and reinforcement. So supervised is where you have some output you're predicting. You have, let's say, output as 0 or 1, which is classification. We have output as the stock price of Apple. What should be the stock price of Apple next day, which is regression. And obviously, I mean, this is one of the most used kind of machine learning currently in finance. Why? Because there are many use cases which can be well defined. So if you think about fraud detection, whether a transaction is fraud or not, right? Credit scoring, whether a person will default or not. Those are typical prediction problem classification, 0, 1. And even if you think about algo trading, you predict whether the price will go up or down, and depending on that, you build your strategy. Depending on that, you have some rules around it, whether the price will go up or down, right? So same is the case with regression. You predict the Apple's stock price tomorrow, and depending on that, you make some rules. It's also being used in derivative pricing. Then we have unsupervised learning. The idea of unsupervised learning is where you don't predict, but you learn pattern from unlabeled data. There's a lot of data. You're trying to make sense out of it. What should be the best way to reduce dimension or group the data? And these are the two categories where you reduce the dimension. Again, used significantly in finance because the volume of data is huge. And then we have clustering, which is the grouping of the data for analysis of, let's say, the different kind of assets which behave similarly or which move similarly, or in portfolio management, what are the different groups of the clients or the investors which look similar. Then reinforcement learning, we have, this is something which is kind of new kid on the block, but very powerful. Here, it's currently being used in algo trading. The idea is that you just learn from experiences. It's completely automated, meaning that you give the data, you ask the algorithm that, hey, you need to maximize your risk-adjusted return. And it trains all by itself. Think of it like a trader's brain, trains all by itself. And it gives you a model which you can feed the data, and it will spit out buy, sell, or hold, and give you a trading strategy. And then we have NLP, natural language processing. It is more like AI. We know the use case. We have seen things like ChatGPT, but in trading, in generally sentiment analysis, you look at the news, Twitter feeds, and you develop a sentiment, 0 or 1, on a scale of, let's say, 1 to 10, and then you feed it into trading strategy. And it's obviously used for multiple use cases. So I guess this is one of the most important slides of providing the details about what are the different areas where machine learning is being used. And then if on the left-hand side, we have different use cases of AI and machine learning in finance. On the right-hand side, you see all of these companies, which are in different space, algo trading, customer service, KYC, sales and marketing, wealth management, and all that. And they have started using AI and machine learning, especially after this ChatGPT, right? And this is just for India, and same is the case for like US. It's even on a steroid, the use of AI and machine learning in finance over here, right? As somebody who will be, let's say, joining MFE, the key areas can be algo trading and wealth management, apart from, of course, fraud detection and then credit scoring. So I'll quickly deep dive into, so you understand. Okay, so let's quickly go deeper into why it is being used. I think we talked about it. It can process high-dimensional multivariate data quickly, and it has the automation capability, decrease the cost, add more efficiency. Now, if you look at algo trading, and let's focus on this for this session. So when it comes to data processing and handling, as I mentioned earlier, we need to handle large amount of data, different kinds of data, and unstructured data. So if you see the first bullet point, when it comes to trading, almost 80% of the data is unstructured. So, and AI and deep learning algorithms are really good at understanding these massive data sets. Different variety of data, like text or image, machine learning and AI are generally good at. Then unsupervised learning to reduce the dimensionality. You have thousands of features. How do you come with like just 2 or 3, which are the most important part? You use things like dimensionality reduction, then NLP for new sentiments. The key thing that it does is it provides you the tool to find that needle in that haystack, right? You have to find that signal in the noise when it comes to algo trading. And if you have all these tools, which can work on unstructured data, reduce the dimensionality, and find the complex relationship, it becomes easier for you to apply these and find that signal when it comes to algo trading. Then we have trading bots. We talked about that traders brain in reinforcement learning. And although I'm going through it, I mean, I encourage you guys to go deeper into this. Maybe you can refer to my book, or there are multiple resources, different papers, and everything about the use of ML. I find it really interesting, and that's kind of growing. Everybody is adopting it, right? Then the speed, of course, because with AI model, you can adapt very quickly and adjust the trades. You also end up eliminating human error because you are doing the data-driven approach. Of course, there'll be some bias, but the bias kind of reduces a little bit compared to if you're doing like a manual trade, and the machine learning makes the bias slightly less. So I think we covered this. How do we use for trading? Supervised, unsupervised reinforcement, and natural language processing. I think I covered all these points. So I'll quickly skip this. Now, futuristic scenario, not to scare anyone, but this was UBS trading floor in 2008, pre-subprime crisis. A lot of people you see in the movies, the typical trading floor, people are shouting and bidding and whatnot. In 2016, because of the quant trading mostly, with all these statistics and faster computer, I see the number of people and the number of desks reduced to 10%. And going forward, I mean, with this is not true as of now. I mean, this is just a speculation. But yeah, going forward, there's a chance that there might be all these AI-based automated trading. There might be hardly traders. It might mostly be all these data centers and GPUs and whatnot. So you should be preparing for this kind of situation. Maybe portfolio management, I will skip. But yeah, I mean, it comes to wealth management. I mean, most of you guys might also be interested in wealth management. All these portfolio management companies who are at once. Even there, I think one of the key problem statement is how do you allocate the money of the client or the investors into well-diversified portfolio. So there are multiple approaches, the traditional finance, mean variance analysis and whatnot. And these days, people have also started using machine learning. So there are a couple of machine learning based approaches. The advantage of that is that it is not subject to a lot of assumptions that you generally see in all these traditional models. And of course, I mean, the advantages that I mentioned, it can process data really fast and it can have goal-based allocation and things like that. There are multiple advantages. Apart from that, it's also used for investment research and then chatbots, chat GPT kind of stuff. People are training things like chat GPT on the wealth, all of the investors' data to give them knowledge and also allocate the portfolio. So all these fancy stuff that's happening. There are a lot of companies which are coming up in this space. And just to keep you guys excited, I mean, the futuristic scenario would be you have your voice recognition applications you just mentioned. Ask them that how much should I invest to get, let's say, 5,000 per month after retirement. It may be linked to your account. It looks at the entire portfolio, also looks at what's happening in the market, and then gives you some kind of indication that, hey, you should invest this much amount in equities, this much amount in fixed income investments and all that. So there'll be these interesting times, I hope, or I guess, I'm going to cover very soon. So I'll skip some of the slides in the interest of time, lending and credit scoring, and maybe I'll share this later. But coming to the key point, how can you learn in machine learning and finance? Of course, there are some courses and sessions that will be there in the MFE program as well. But I mean, while we were writing this book, why we wrote this book, some of the reasons were like there were a lot of books in AI machine learning, but it was not customized to finance. Right. So the machine learning which is used in finance is slightly different. It might not be that cutting edge that you need for ChatGPT. It might just be a simpler one where you need to find or you need to figure out a way to find that needle in haystack. There were many use cases in all the literature that we looked at. There were many use cases covered. There were mostly trading which was covered, and many other use cases were skipped, be it credit scoring, portfolio management. So we tried to cover like the breadth. Then there are a lot of unstructured material. Let's say in 2017, when I tried to find something in machine learning and finance, there were a lot of papers and I got lost, right? So needed some structured material, right? And that's what was one of the reasons we wrote this book. And then the material that you will see are either too theoretical, which will be into too much of equations, or too general, like very high level. So we wanted to hit the sweet spot and cover both this aspect, not just theoretical, but also something which is very, very practical. So when you are, let's say, doing some courses or trying to learn AI machine learning in finance, I think the focus should be customized to finance. Yes, you can go and read about encoder, decoder, and whatnot, all these fancy stuff. But at the same time, don't deviate quite a lot from what's the practical use case in finance. Also try to cover multiple use cases within trading itself. I gave you a couple of examples in supervised, unsupervised, and reinforcement learning and whatnot. So you try to cover the breadth as well. Try to have some structure around how you're studying. Yes, you can go through a lot of concepts, but having a right structure is important. And Then the practical material that should be applied to the real life situation. That's very important. Yes, you can go through the theories uh, and look at different papers, but unless and until you apply it, get your hands dirty, it's somewhat difficult to learn. But and it's not that difficult to learn or get your hands dirty with all these GitHub repos and material available these days. So yeah, I think we are close to completion or close to the time. But yeah, I'll just give you like quick takeaway. You see all these scary posts or scary news that jobs will be gone. Uh, but at the same time, as I mentioned earlier, there are a lot of jobs coming up, my take, in AI, especially in finance. So if you're able to reinvent yourself, I'm sure, I mean, things will be easier for you guys going forward. So yeah, not to scare you again, but just leaving on a positive note, just reinvent yourself before it's too late.
If you like this video, click the bell icon for more such content.